Stars and midnight blue. You know when you gave your love away, it opens your heart, everything is new, and you know time will always find a way to let your heart believe it's true. You know love is everything you say, a whisper, a word, promises you give. You feel it in the heartbeat of the day. You know this is the way love is. Amarante, Amarante, Amarante. Love is love. Amarante, Amarante, Amarante. Love is love. You know love may sometimes make you cry, so let the tears go, they will flow away, for you know love will always let you fly. How far a heart can fly away. Amarante, Amarante, Amarante. Love is love. Amarante. this moment. Only in my dreams you're missing, but you're always a heartbeat from me. I'm lost now without you. I don't know where you are. I keep watching, I keep hoping, but time keeps us apart. Is there a way I can find you? Is there a sign I should know? Is there a road I could follow to bring you back home? Winter lies before me. Now you're so far away. In the darkness of my dreaming, the light of you will stay. If I could be close beside you, if I could be where you are, if I could reach out and touch you and bring you back home. Is there a way I can find you? Is there a sign I should know? Is there a road I could follow to bring you back home to me? Ever close your eyes, ever stop and listen, ever feel alive and you're nothing missing. You don't need a reason, let the day go on and on. Let the rain fall down everywhere around you, give into it now, let the day surround you. You don't need a reason, let the rain go on and on.
Good morning. Good morning, everybody. And let's turn that down and hope everyone's having a good morning. We thought we'd punch up. We haven't been able to, and been pretty busy of late. Not to mention 10 days offline due to a hurricane. Um, thank you very much, Uncle Milty, Uncle Milton. But hope you're doing well this morning. I'm Bagger Don. This is Stock Market Caddy. We're going to give you a view up until maybe 12:30-ish. And and at the same time, the reason why we do these YouTube videos is probably rather obvious. We want to create some awareness of who we are, what we're about, what we're doing from day to day, as best we can and also describe for you who we are not. So let me just do that for a moment. We are based in Tampa, Florida, and I am not, Susan and I, we are not brokers. We're not financial advisors. So therefore, we are not making specific recommendations to buy or sell a thing. Um, Now, there was a time when I thought, hey, maybe we'd go that direction, but it's like, nah, I don't think so. Didn't want to, don't want to. And we don't manage anyone's money. We're doing something very different. We're giving you a glimpse of how we go about trading ourselves. And to that extent, we are a mentorship for folks who want to learn how to trade the markets. This could be with stock, options, or futures. Now, I don't have a whole lot of experience trading Forex, but you could potentially use some of these tools on Forex. Um, we will trade currencies using futures. We will trade crypto using futures as well. We do have members that have taken specific tools of ours and applied what they learned to the crypto market and have done exceptionally well. They are both our, you know, I guess our brightest stars and maybe our worst lessons for ourselves because I probably should have taken a page out of their book. But that's okay. It's not a zero-sum game. But I'm talking one person in particular becoming independently wealthy. I mean, hugely wealthy, much bigger than Baggert on. Just absolutely and came to us with no trading experience, which is, but he was not, you can't really say he was right place, right time. He was right place, right time, but he put himself in the right place at the right time. And he probably still is. And in whatever endeavor he does, there are people like that. And maybe you're one of them. Maybe you're coming by. So we are a mentorship, but it is not an apprenticeship, a little bit different, right? So we will make available to our monthly members, we'll make available our tools, our algos that look at futures markets, all of them, look at exchange traded funds, ETFs, look at the S&P 500, look at the NASDAQ 100 on a nightly basis, and we'll make a short video view of these algos from Sunday through Thursday. That video view is anywhere from 10 to 15 minutes to no more than an hour. Usually on Sunday it's an hour. Most nights I'd probably say it's 15 to 20 minutes thereabouts. We try to present it in the same fashion every night. Um, and it is chock full of trading opportunities. Now, when a person signs up as a monthly member, though, I don't know what experience they have. I don't know. Um, so how do I put this? If you have trading experience in and if you do or you don't, right? And that's fine, right? Everyone's got to come at this, and everyone does come at this at different levels. If you have if you have been trading and you've had success and you're looking for a source of opportunities, it's going to be wonderful for you. If you don't have any trading experience, um, you might be bewildered. I mean, um, you just don't know what you don't know, and that's okay, right? That's the first step of learning anything, right? Is not knowing what you don't know. Then you become aware of something that you don't know, and then you decide, yes, I want to learn. No, I don't. And it's okay to say, no, I don't. I just that's the first step of learning anything. So I describe this because I sometimes think we have a very, very high retention of monthly members, though. It's month to month, it's like 90%. It's very, very high. Because I think it represents really, really good value. I mean, you only need a few, a few a year that'll more than cover, the expense or the cost if you look at it that way. But you potentially could do, so much better. But if you're coming at this from a gambling perspective, oh, I'm going to subscribe to this guy for a month, and I want to know. No one's ever said this necessarily, although I have had one person ask, and the person asked, Don, I just want to know what's going to happen tomorrow. That's it. That's all. I just want to know. I want to subscribe, and I want to know what's going to happen tomorrow. Well, nobody can tell you what's going to happen tomorrow. So think of it this way. If you have a daily chart, what you're looking for, what you're asking for, what you're thinking you want is, I want to know what's going to happen on the next bar. Now, that can be done on occasion, but not every single day. And if we knew just once, if I, had Nancy Pelosi's insight, if I knew just once, then I could put it all on red or black and play for that one day and be done, right? So nobody knows. Here we are, we're looking at trading intraday. We're looking at 1 minute, 3 minute, 5 minute. And that, we got our hands full just knowing what the next minute is going to produce, let alone the next day or the next week or the next month. So, I just described that. If you're looking for something that doesn't exist, think about this. And this applies not just to trading, but if you're looking for something that doesn't exist, you're probably going to be disappointed. Think about that, right? Um, so I don't want anyone disappointed. I don't want to see you waste your time. I don't want to see you waste your money. But what is it you're doing, Don? I don't understand that. If you can't tell me what's going to happen tomorrow, then what are you doing? Well, we're playing the probabilities. And so when we're trading intraday, we're trading futures, we're trading the here and the now, and we're managing risk here and now. When we trade overnight, we use options. That could be for a few days, but mostly it's 35 to 45 days. So you might think of it this way: when we're trading intraday, we're spear fishing. Very, very precise. When we're trading with options, we're kind of like, crab fishing. We're throwing the pot over the side of the boat, letting it soak, and then pulling it in with hopefully a nice catch. So if you're out there and you're trying to find a service that is going to give you, tomorrow's trade so that you can put $100,000 on tomorrow, I don't think that's a good idea. And I think you're going to get hurt, and I think you're going to be very disappointed. That's not what we're doing, right? We're trying to teach, we're trying to mentor, we're trying to show folks how to trade the markets day in and day out and have fun doing it. It should be fun, right? It should be enjoyable. If that's the other part too. If trading in the markets is a source of frustration, is a source of anger, is a source of, just that, you might not want to do it. You might not. Um, I love to play golf. I sometimes wonder, I don't say anything, but I'll play with somebody, most of the time it's somebody I don't know, and they just come up and they hit a bad shot, and the next thing you know, the 5 iron is they're throwing it into the woods. Like what? And I just like, I don't say anything, but I'm like, "God, why are you bothering?" They get all angry and all upset and they upset everybody around them. They don't upset me. I could care less. But but a lot of times they do. And it's a distraction. And what it leaves me with is like, why are you out here playing golf? I mean, do something else, I mean, with your time. I mean, maybe you want to go fishing. I don't know. Maybe you want to go to a strip club. I don't know. Hope I didn't offend anybody with that. I don't go to strip clubs. Um, but do something that's not a source of frustration to you. So that's a big part of it. I hope that makes sense a little bit. Um, and now when a person comes in as a monthly member, not knowing what their level of experience is, we can have folks that they'll tell me, Don, I'll give these little examples. Um, and I remember one person in particular, he said, I've been trading options for 5 years. I'm like, okay. Um, and I asked, well, how are you choosing them? Well, I have a service. It's about $100 a month. And and this guy presents every night 10 option trades. I'm like, okay. And what do you do from there? I usually pick 5 calls and 5 puts. Or, I pick from there. And I said, how do you know what to pick? Well, I just kind of pick them. I'm like, okay. And I said, and you've been doing it for 5 years. Yep. I said, how have you done? Not so good. Have you made any money? Not really. No, I probably lost a little bit, made a little bit, but I haven't really done anything. Okay, well, that's not so good. Doing something for 5 years and just treading. But then I asked the much more valuable lesson. Have you learned anything? Not a thing. Not a thing. He said he never tells me how he picks them. I don't know where they're coming from. I mean, it's kind of why would you do this for 5 years? And on top of it, you don't learn anything. So when it comes to options too, we've talked to people with options and I'll ask, well, how are they priced? Oh, we've got some stuff with Greeks. Theta. Okay. Or gamma. Or, delta. But they have no idea what any of that means. Um, I don't think this is just in general. I don't think you should make an investment or a trade in anything, a house, a business, if you don't understand it. I just don't think you should. I wouldn't, I just wouldn't. I mean, why would I want to do that? Right? I would rather get an education. Like if I'm going to go buy a Subway store, which I'm not going to buy a Subway store, but not any, no. But if I was, right? I mean, I think I ought to know something about, sandwich shops or something. I ought to know something. I better go find out about it. I'm just not going to buy it to buy it. Just because I paid for it, I mean, I can necessarily make money on it. So I think that you owe yourself an education to find out. Now, there's a lot of free education out there. There is, of course, with the internet. Um, but you can spend a month of Sundays, truly, especially when it comes to options. One of the one of the I think the advantages for what we do at our Q school is um, I'm not from Wall Street and I'm not from Madison Avenue. And I spent 25 years of my life teaching surgeons how to do surgery, truly. And yet I never took a biology class. No, never did. Nope. And I'm not a doctor and I'm not a nurse, but I was trained, I was taught by companies and what I had to do, it was difficult, it was stressful, it was a lot. And there were some times in the beginning I said, Susie, I don't know, if this is, for me here. I'm really kind of over my head. But I stayed with it, and I had to take very complex um surgery issues, concepts, tools, and convert them to very simple terms, not for the surgeon, because the surgeon is a surgeon, but for me, so that I can understand them. And then fortunately, I was able to articulate what those concepts were with folks that obviously knew much more than me, namely surgeons. And so I never tried to be a surgeon. I wasn't a surgeon, but I understood the concepts and I could converse with them and they with me. And so we had some wonderful relationships and, had great success all the way around. In fact, one of the companies I work with, I borrow actually the phrase in what we're doing here. It was improving surgical outcomes through innovation. Improving surgical outcomes through innovation. What we're trying to do here is improve trading outcomes through innovation. I borrow the phrase. It works. But you have to be prepared to learn, you know. You have to want to learn. Um, and that first step of learning, or the 5 stages of learning, becoming aware of something you don't know, and then saying, okay, hey, this guy's doing something, or this person's doing something, or that surgeon's doing something. I need to learn that. And then you have to go and ideally, if you can find a mentor, there's not many. I mean, you may think there's a ton, but not really. Um, someone that's gonna, spend quality time with you. And then you're going to become in the beginning, of learning something, you may be um the first step they talk about it being unconsciously incompetent. You don't know what you don't know. And then you become consciously incompetent. And that's not a bad thing. Don't think it's a bad thing. It's just learning. We do this with everything, fly fishing, golfing, everything, right? And you become aware and you say, man, you know, my golf swing really sucks. I'm aware. I mean, look at that guy hit the golf ball. I can't hit the golf ball like that. So you become aware of of a particular shortcoming, and I'll pick on my golf game. So what do? I could take the clubs and throw them in the lake or hang them up. I can't play that. I don't have enough time. Or I find myself a mentor, someone that can teach me the golf swing. And he does it, and it looks ridiculously easy. How hard can that be? And then I stand up into the hitting bay and I get frustrated, But what I'm trying to, develop is where I become consciously competent. And I have to think about what I'm doing. I have to think about my stance. I have to think about my posture. I have to think about my grip. I have to think about the backswing. I have to think about the follow through. And it feels very mechanical. And it's, man, am I ever going to be able to hit the? And then suddenly I get a couple of clicks. Like click, click. Oh, that's how that golf ball is supposed to feel coming off. And then you stay with that mechanical process. And if you stay with it, if you do, the next stage is when you become unconsciously competent. And then suddenly you're hitting a golf ball. Now, you may not be Tiger Woods, you may not be, you know, um, one of the pros, but you can play beautiful golf and have a beautiful swing. And you're out there playing golf and you're not even thinking about your stance, your posture, your grip, the backswing. You're not. You're just hitting the shots and you're literally just playing the game. Now I'm using golf here as a metaphor, but trading is the same way. It's the same thing. It's the same process. It really is. And you have to think about, do you really want, do you really want to do this? And at what level do you want to do this? And you define that. We don't, I don't say that everybody should do this. I don't. In fact, I think probably most people shouldn't. Um, it's got to be something you really, really want to do. Um, I hope that makes a little bit of sense. So coming in as a monthly member, I don't know where your golf swing is. I don't know where your trading ability is. So like if you just join for a month and you're expecting, or 2 weeks, and you're expecting, that you're going to drive the golf ball 350 yards, tomorrow. I mean, that's kind of, that's not real. That's not realistic, you know. So you have to decide, do I really want to learn? Do I want to apply this? Um, the monthly memberships does not include the Q School. The monthly memberships, though, we have all these algos that we present at night, and there are tutorials on these algos, and we explain what they're presenting and how they're presenting it, and you get to choose from there. But that doesn't mean that you still have, the proper mechanics for like trading options or swing trading. Maybe you do, maybe you don't. You might learn some of it through osmosis of that, but if you want to go through the Q School as a monthly member, you can do that, and you're going to learn a lot. You're going to learn a ton, especially around options. And you're going to learn what's most important, right? We're going to hopefully maximize your time. Now, of course, if you want to become an annual member, you have to go through the Q. And at the end of the Q School, you'll have a really good idea who we are, what the tools are. You have a much better idea of your own trading ability, trading intraday, ideally futures. But we will go through the options. And then you get to decide at the end of the Q School whether or not you want to become an annual member. And if you do, we're going to credit you back 30% of the cost that you made, and you're going to get the tools on your desktop for a full year. And then if you join the next year, we're going to give you an extra month free for your first year, an extra month for the forward year, second. And we're going to do that up to 6 years, whereby you effectively reduce the cost of Stock Market Caddy. You actually cut it in half, but we cut it in half for you. So the idea is that we keep adding value and reducing your cost. We're trying to help people learn to trade as a business. Okay, so if you're just messing around, just fooling around, have at it, fool around, have fun. But you probably don't want to make the investment with us, because I'm not fooling around. We're not doing this. Um, this is, I mean, we enjoy what we're doing. We very much enjoy it, but we're trading as a business. We're creating cash flow from the money flow and trying to do it day in and day out. Does that make sense? So I hope so. And if you do join as a monthly member and you're struggling or something, you can always email me. I wish I could talk to everybody for hours on end, but we can't. But we just have the most valuable commodity of all is time. We can't buy it, we can't sell it, we can't make it, so we want to maximize it. And when you're in Q School, your education takes priority over everyone, everyone else, and including what we're doing day in and day out. What you can't see right now is we have 5 different markets running a program, 5 different markets. And on another screen, they're presenting trades to me. I took one. I took one this morning about 8:30, and that's that NQ. And we're sitting on it. Because I was also influenced. It wasn't Swing Machine that put the trade on, it was another tool. But I was influenced by Swing Machine. I thought, I'm going to sit on it. And we are sitting on it. The amount of capital that we're using at this very moment is $2,400. And we're up 2,400. It's 100%. Now we also have options on. We do. We put options on both on Friday and on Monday. I was licking my chops to get my options on Friday. Couldn't wait. It was a sweet setup. Um, but I'm happy to answer any of your questions. When it comes to options, I want to be careful about this. I don't want to say it's not that they're easier or harder, but um, they're different than futures, right? Futures we have. Why do we trade futures? I should really explain. We trade futures during the day because they're highly liquid. The difference between the bid and the ask is very small. We have market access almost around the clock, and they're leveraged. A crazy leverage, not Forex leverage, but they're leveraged. We can come in and do what we need to do. Now, we did have a $125 drawdown on that trade. You can see it up there. We've had a run up of 2,600. We're up 100, over 100% of our capital. But we don't even keep track. We don't score. We had a short conversation with Joe just the other day. I think he might be here, and I'll explain. I have a little more time. I'll explain how we keep score. But um, there was a thought. It evades me. I got a Biden moment. Oh my goodness. Well, there's so many different little things. Um, I know everyone wants to know, why did you get in the trade? And was it a moving average? And was it a stochastic? And was it a MACD? And this and that? And oh, what's the market gonna? Oh, and it's this and all that noise and all that emotion. We don't do any of that. We just don't. That would get exhausting. Yeah. I mean that'll run its course. We told everybody last night, get ready for gold and silver to be coming back too, by the way. That would have been a beautiful trade this morning. Let's go look. Let me just highlight Swing Machine here for a moment. But also too, when it comes to oh, I was talking about, why we trade futures, liquidity, market access, leverage. Options, when we take our blocks of money and we're going to go overnight for a few days, ideally a few weeks, 35 to 45 days. So the options we put on Friday and Monday are going out 45 days. And when we do that, we use options. Now, options are all math. They're all math. And I think the biggest mistake people make in trading options is they go to the chart. They go to the chart first. And that's not what you want to do. And you need to understand that options, the math in the options formula is based on the exercise price, the time involved, in the implied volatility, right? So you got to get the price right, you got to get the direction right, the timing right, and the implied volatility right. Now, there's some fudge factors in that. I mean, there's some room to get some of that wrong. But also, too, if you don't understand that, and you could get the direction right, you get the price right, you get the timing right, but if you overpay because you didn't get the implied volatility right, you got to come up snake eyes. And that's why 90% of people lose money in options, and I think it's probably higher than that because they just don't know, and they don't care to know. They don't care to learn. We have programs that do all of that for you every single night. Our monthly members get to see that every single night. I'll show it to you in a moment. But then there's also a skill set of where do you place them on the delta? Where do you place them? And how do you place them? Now, most people buying options, they're buying options. The pros are selling. We blend. So if you buy a call or you buy a put, the probability of profit, not the probability of outcome, but the probability of profit is 33%, meaning you got a 66% chance that you're going to lose. You could do the exact same trade, and if you did a credit spread, improve your probability of profit to 66%. Just change it around. But most people don't know how to do it. They don't bother to do it. By the way, we're getting various orders on the other markets, and I'm not using them now. I'm just ignoring them. I'm just ignoring them. When the TradeStation pop-up comes up, it says, Don, do you want to take this order? Do you not want to take it? So I can buy it, I can sell it, or I can just push ignore, or I could go to my trade manager, I could go to the chart. And I'm just, as I'm talking with you, these orders are popping up to me. It's like having a trade assistant, a really good looking one. Susan. Uh, I won't go there. Can't do that today. I'm an old dinosaur, right? An old boomer. Um, so you need to know that. And we look at the math first on the options, and then we might take the option or the stock or the underlying and look at it on a chart. So we do it. So let me just go show you. Let's go take a peek at this. This tool, now the screen is a little bit messed up because of what we just did here, but this tool here is called SMC Options Defined Risk Club Selector. And let's just sort this. I don't know why that little iron condor is showing up here. So here are I remember seeing this real time. Here are the trade options or the trade suggestions here. Now, please don't take these, right? I wouldn't, but also too, I mean, even GE, that would have shown up. This would have probably shown up last night to sell a put credit spread, and it's up like $7 as an example. Now we can cherry pick. I'm not going to cherry pick, but also we're going to go to the Euphoria side, and you can see our members saw all these late yesterday. You can see the little phantom vignette. So for instance, what was this? Netflix was suggesting to sell a call credit spread the last couple of days. And this is where they get them. But notice here it says buy a put debit spread, buy a put debit spread, sell a call credit spread. Now these are all defined risk. Why is it doing that? It's doing the math. It's doing the math. It's looking at the price, it's looking at the direction, it's looking at the timing, and it's looking at the implied volatility. Now, this alone isn't necessarily going, it's going to do a lot, but if you want to take it now, where you place these and your depth of experience on how to place them, is another thing, right? So if you join as a monthly and you don't know the difference between a debit spread and a call credit spread, and you don't know where to place them, then you're still probably not going to do very well. It's kind of like the guy who goes to the driving range and gets a bucket of balls and he sprays a few around, he hits a couple okay, and then next thing you know, on Saturday morning, he's playing in front of me on a legitimate golf course, and my 3.5 hour round turns into a 5 hour round. I mean, it's so just getting these alone doesn't mean, I mean, you have to have some experience doing these. And then, of course, if we want the iron condors in here, iron condors are a neutral strategy. And this is the whole S&P 500. They're not all iron condors, there's a lot of them, but these would be the best ones today, right here, right now. Would be the best ones. But this is where our members are getting this sort of thing. We have another tool that, especially for you people that like to, not you people, I don't be talking at anybody. I mean, not at all. That was kind of a rude, you people is not a nice phrase. Um, where I'm looking for, oh, it's the Pebble Beach. So we do it too, right? I just don't, I'm not just staring at a screen all day though, reading candles. I have a machine doing it. And you get to see these at night. Um, that's a good question. Could you change it from 30 to 45? Yes, you could, right? You don't have to do 30 to 45. And in fact, we got a lot of members that are doing, and we now you can also grab some of these tools and put them on Swing Machine on an hourly and do, and we've been doing zero DTEs for years, 2 or 3 day options, they're kind of like lottery tickets, but they're fine. They're fine to do them. I mean, you certainly could do that. So let's go to this is the what we call the Pebble Beach triggers. So this is SMC Trade Generator Pebble Beach triggers. Now this is on a daily basis because we show this at night on a daily basis. And now if this is on your desktop and you're comfortable with the options, you could set this as on a 15-minute, even a 10-minute, and it works very, very well too. If you want to trade, options that actively, I would use options. I wouldn't buy 100 shares of Texas Instruments because that'd be $20,000. I would get an option. So what is this showing you or showing us? These are all today. These are all these trades are today. And every single one of them, take out the label row. There are 24 trades, and they're all profitable except one. And these are the best ones up here. And this is Seagate, and it's a short. Boston Scientific, that piece of crap. There's a story behind that. I like Boston Scientific. A Boeing, and then Texas Instruments is a buy. So here's the entry price, 111.70. This purse is based on I think it's $10,000. You can set the purse. Let me go look. You can put in the amount of money that you want to trade. So the dollars per trade, we got it in at $10,000. So that's where the purse is coming from. The stop, it even gives you a stop. So if you did short it and it gets above 114, you probably want to come out. Here's the entry date, and this also is a fair gauge. So let's look at Texas Instruments, though. It's a buy. Yeah, it looks pretty good. Now, it's possible that there was a gap, right? And so this says 196. This thing gapped up. So you wouldn't have been able to get 196. Let me see what you could have got. Maybe you could have. No, you could have got it at 198. So this is susceptible to a gap. But it's a beautiful tool. Let's look at Costco. Could we have gotten the price? Well, it's just in there now. Let's see. Let's pick another one. All right, let's look at Boston Scientific. Short at 87.87. Could we have gotten that price? What's the high today? The high was 85.80. Once again, it gapped down, but you very well could have gotten a signal on this even yesterday. They will continue. We have it set so that these signals will continue for 3 days. So it's by looking at this, I can tell you we probably got a short on Boston Scientific yesterday. But as an example, but this is for our nightly or our monthly members. So they get plenty of opportunity. And here's iSurge, which has been running. As an example, I'm going to go back. Now let's look at this. This is a beautiful tool here. This is we'll come back to options. This, you can't see it here. Maybe I bring it down. There it is. SMC options expected move radar. So what is that? And we have it on the whole S&P. This uses the options formula to tell us what is the expected move for the next day, 1 day. And so it's kind of interesting. The SPY was expected to move. It's moving about 0.9. It's moving about $5 a day right now. It's already moved 3. It's not giving direction. It's just telling you what's moving. And then here are, these would have been there last night. This tells us the stocks that are going to be most volatile tomorrow. And if you want to go out 15 days, say, I want to know what stocks are going to make the biggest move in the next 15 days. I don't know what's going on with this, but what is this stock? Globe Life. Expected to move 20%. Could be up, could be down. May have earnings, probably has earnings, has something in there. See, because the market always knows. The options market and the market, what is knowable is known, and it's priced thin. And we want to know. Maybe you don't want to know. Maybe you want the stuff that's going to move the least, and that would be some of this. Because maybe you want to go down and sell some put credit spreads on stuff that isn't going to move and just collect the money. And similar to what Joe was just asking, we take this out 45 days, but you can come into the program and you could set it on any day you want. But if your knowledge base of options is just calls and puts, you know, um, that's not so good. There's so much more that you can do and so much more that you should be doing. Makes sense? Let's go look at let's see, traditional view. I want to look at the S&P. This is the S&P on a Renko chart. I didn't type this in. The machine did that under accumulation. Now our members get to see this every night. So when we were down in here, this goes all the way back to September 11th. September 11th. This is when these were little cell dots. By the way, look, the brick value here is $1,000. This green dot does not show up until this green brick here. It's 3 of them show up. So stay with me. Could you have made $1,000 on this one brick? Yes. Could you have made $1,000 here? Yes. Could you have made $1,000 here? Yes, these are cells. Could you have made one brick 1,000? Yes. Could you have made 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 1,000? Yes. The biggest problem you would have had was I should have made even more. You would have been leaving a ton of money on the table. And that's okay. That's when you know you're trading well. But you could have. Now this goes back, weeks and months here. But every single one of them, if you wanted to play, so if you want to play the course with a 9-iron, so we like to, you could. You could. And, you're not going to get into too much trouble and you're going to, have a nice day and, you're going to have to be very patient. It's going to take you a little longer, right? But if you just want to come into the market because you joined as a monthly or you just joined some guy and you're like, oh, I'm going to short the market. I'm going to come in here and I'm going to pick the top honey and we're going to put 500,000 into a put and we're going to make 2 million. Okay, well, I hope you hit it. Maybe you do, maybe you don't. But even if you do, it does you no good if you can't repeat something. Got to be able to repeat it. You got to be able to repeat it. Now, we are pulling back. We don't have a sell dot, but we've been telling everybody we need to take out that swing. We'll probably come down into here, probably, right in this area. We'll get a little bounce, and then we're going to be looking for a C point down. And then we need to take this area out, 57.41. We take that out. We'll probably be on our way back down into 54.63, right in here. Very, very simple. The machine is going to tell us when we want to favor the short side. It's going to tell us when it's under distribution. It's going to just speak to us in English. So I can listen to Enya, don't make fun of it. I can read a book. I can talk to our members who are in Q school. Um, you know, it's, I'm not thinking about my stance, my grip. I'm just not thinking about that anymore. It's really nice. It's very liberating. I don't have to think about the election. I don't have to think about, gold or silver, it is what it is. And if we wanted to go here, let's slide over here. Um, let's see here. Now we do monitor the other markets. I should show you this. So we have some stock people. So can we put the stocks into Swing Machine? Yes. So bear with me. Come over. Um, Let me look here. All right, so this is Swing Machine for the S&P 500. Now, I don't think many people would ever show you this. We're going to show you how we're positioned on all 500 stocks. So here's the whole S&P 500. This is Swing Machine. It's blue because it's on stocks. Here's the signal. This tells us how many days we've been in. The percentage return is the difference between the entry price and where it's trading now. So I'm going to sort this. I'm going to show you all of them, so it's not sleight of hand. The biggest one here is, I don't even know what this is, Targa Res Corp. It's up 92% in 187 days. So what I want to show you, it's long for 187 days. This one here has been short Solar Edge for 171 days. Now, if you shorted it, yes, and you're an aggressive trader and you know how to do that, you'd be up something, in shares just in the price, 80%. Now, if you had owned it because your Edward Jones booker put you in it and you got a sell signal here, maybe you got out, you would have saved yourself an 80% haircut while he's at the mall shopping. So let's scroll down and let me show you. I want you to come with me and watch how many stocks of the S&P 500, where long and short, are we up. So stay with me. I'm going to just kind of scroll rather quickly. Keep going. We're still profitable. We're long and short all these. Let's go faster. Don't make you dizzy. We're still profitable. They're all at different ages, but you get these. Keep going. Keep going. She's going to turn yellow in a moment. And okay, so out of 500 stocks, 412, 411 were profitable. The yellow ones are even. And then we're going to get some red ones. Okay, so, all right. So at this point, we're out of 500, 430, we're either flat or up. And then, yes, we are experiencing some draws on the remainder. And how much are those? What's the worst one? What is this? Walgreens went long 6 days ago. Thing has been crushed. We had been short. That was one of the biggest ones on the short side. So they are trying to buy it, but it's down 14%. Now, what these are expired symbols. That's why it's not working on those other symbols. TradeStation's got to update its S&P list. I'm going to slide these back up, and we can do this, on anything and everything. Let's just go. I'll make you dizzy. Let's do it with the NASDAQ 100. CETAS. And let's scroll down. Out of the NASDAQ 100, how many stocks are we up or down? So let's keep going. And we got some shorts. We got quite a few shorts still. So they're thereabouts 83, maybe 86. And now the others are down. They're drawing down. And the worst one is still, I don't know why that's showing up in the NASDAQ, WBA, maybe. Walgreens has absolutely been crushed. I have no idea what's going on with that sort of thing, but doesn't matter. And that's why I don't have an opinion. I do like economics a little bit. I think it's a junk science. I'm happy to converse about that sort of thing, but we don't trade on that stuff. And and the company people, I mean, they know what's going on with their company and they're gonna lie. I work for those, some companies, I mean, they're gonna lie to the public. Um, and we'll go back to Swing Machine. Um, the beauty of the machinery is it doesn't have an ego. It's just going to act. It doesn't win on every single trade. It doesn't. But what it does do, it kicks out the losers. People won't do that. They'll talk to their broker once or twice a year at the beginning of the year. Okay, get me in the S&P. I'm gonna get the bottom on Walgreens. Yeah, get me some of that. Get me some of this, and then they go to sleep. And 5 years later, they got what they got. They have no idea. They don't even probably remember why they even bought it, and they just in it. Teddy, Teddy, we're not going for a walk right now. He comes over and he hits my arm, my elbow. So then I can't move the mouse. I can't show anybody anything, Ted. Ted's a 4-year-old golden. So I'm happy to answer any question. We're still sitting on this trade, and we're going to be wrapping up shortly. And we can change on radar. Joe asked about, could it be, less than 35 days? Yeah, you can. Yeah. I mean, you define that. The other thing is that sometimes people will say, well, you don't have any alerts. I want alerts. Well, we show you all the tools at night and you have to know what you're doing and pull them out. Um, but if you have these tools on your desktop, you can write your own alerts and you define them. And so you want to know when the S&P does something on an hourly basis, then you send the alert to your email and then schedule your email so that it sends you a text and you're writing your own alerts. So we don't have to do it. Do your own. Tailor it to yourself. And our members are doing that. Trust me, they're doing it. They work very, very hard. They are carving it up. They've been doing it for years. So let me just show you now, and I let's just highlight a couple of things before we change the interval here. So the the VIX on Swing Machine went long right here at 8:10 this morning. Oops, let's not make it yellow. Let's make it green. The VIX went long, which tells us that the market is spooked. Something's up at 8:10. Now, it sometimes it forecasts and sometimes it reacts. The 5-minute ES went short at 445. I'm going to talk to you about that time. Check out when the NASDAQ went. 420. Elon Musk time. I don't smoke weed, but maybe those in the war room. There is a war room in the Treasury. It opens at 4 a.m., guys. Europe opens at 3. Our Treasury war room opens at 4, and they're on the phone with the Hedgies and Citadel and the rest of them, or they're communicating. They're active. So I'm not surprised that this happened at 4:45 and 4:20. The Dow went. It's had a couple of trades in here, but it was short at 10:15. Many times they go together. Here's the Russell going short at 10:15. The big one was gold. They don't like Americans buying gold. They just don't. So they can own gold. They want to own gold, but they don't want you owning gold. And that was at 540. Short. It was extended. But that was the trade. Entries matter. 3 grand. And then Bitcoin. Now, by the way, this is Bitcoin on a daily basis. Then it went long 9 days ago at 63,000 a coin. And you can change these to a different interval. I got to be careful that I don't screw this up. So let me go back to where I was here. I goofed this up. My scaling. There we go. I got to be careful here. I'll mess it up. We dress it up a little bit, not to hide anything, but to make it a little more attractive on Zoom. So here, what I was going to do, I was going to change this to a 60-minute. So the 60-minute went short on an hourly 52 hours ago. Now, on a futures contract, you'd be up 1750, but maybe you wanted to get a put. Maybe you wanted to sell a credit spread. That was back on the 21st. So you can do that sort of thing. We always just keep it 135, but if it's sitting on your desktop, you get to choose. Make sense? Folks, all are yeah, the purse is set at one contract. Now, if you're trading a micro contract, which we didn't always have micros, it would be 1/10 the size. So you can do that. It is now scalable. So the ES wouldn't be up. So this one's up 1,500 on a mini. If you were doing it with a micro, you'd be up 150. If you were doing it with a NASDAQ, you'd be up, 300, which is still just fine, right? There are, when you're trading futures, if you count Sunday nights, there are 24 trading days. We generally don't trade on Fridays. We're down to 20. $100 a day is 2,000 a month. 200 is 4,000. 500 is 10,000. Nothing to sneeze at. But we're not winging it. We're not, I'm not listening to Peter Schiff. I'm not reading, the Wall Street Journal. I'm not listening to CNBC. I'm not reading candles. I'm not using moving averages or stochastics or MACDs. And I'm not going from chart to chart to chart. And I'm not buying a bunch of calls and a bunch of puts and just flinging money around. And I'm not fooling around. Okay, we're here a lot. I like doing this. I love doing this. I love sharing it. We're very well rewarded, but we're not screwing around. And we've been doing this. So Susan and I started doing this in earnest after 2000. Stock Market Caddy was not even a thought. Stock Market Caddy came out of the ground around 2012, 2011, simply because I was bored shitless. It's very boring. When we trade like this, I mean, it's just, it's just boring. And boring is good. And I hope, when you go through the Q school, I hope I can get you to a place where you are also bored shitless. Because then we will have done our job and get rid of, if you are getting, and if you are, you're getting a dopamine rush, because of one trade. You're trading greed and fear. Let me just share this with everybody. I started to explain this to Joe the other day, Joe, and I'm sorry we were kind of pinched. This is very, very important. If you don't know how to keep score on anything, think about it, then you don't know what you need to work on, right? So when you go to school, they used to in the old days give you A, B, C, D, and F, right? And, if you got a C in music appreciation, that was the only C I got in, I think in my life in college. art appreciation and music appreciation were the two damn C's. I think just enough to get past. I just didn't have it. Um, but so but you know what you had to work on, right? So if you're just doing passive fail or you're just keeping track of the money, greed and fear, then you're not getting inside your own trading and you don't know what to work on. So how do you keep score, Don? All right. So the traditional way is this. Um, let's say you go to the golf, your golf club, and everyone who's played golf has this, right? It may not happen on the first tee, but the second and third tee, and some guy wants to tell you you've never met before, and I got this boutique broker. Oh man, he's really good. He's getting me 10% a year. Yeah, he's really good. You're like, wow, if you play your cards right this golf round, you know what? I might give you his number, right? All right. So, um, and I just listen and smile and, never discuss this, right? I don't discuss the markets out in public because the public, they don't know what they don't know, right? So, but I will discuss it with you guys. Um, when somebody does that, what are you thinking? I know what I'm thinking. 10% on what? 10% on 10,000 bucks? He made $1,000. 10% on 100,000, he made 10,000. 10% on a million? 10% on 50 million, 100 million? I mean, okay, who knows, right? Now, if you're Warren Buffett and you got hundreds and hundreds of millions, or you're a mutual fund and you got billions and billions, and you're getting 10% a year and it gives you something to market so that you can aggregate more money, I get it. That's what people do. But we don't keep score on the percentage return because it doesn't give us what we need. The next time you go on the golf course, you're going to have a guy that comes out and says, you know something? I got that. I got a call option on Nvidia. No, I'll take it back. He's got another one. I got a guy I subscribe to. He's out of Connecticut. He's a hockey captain, and he's got a win-loss ratio. When I subscribe to him, he's got a win-loss ratio of 85%. Now you better subscribe to him. He's got a win-loss ratio of 85%, sometimes 90%. That doesn't tell me anything either. The win-loss ratio. Why? Well, you could have a win-loss ratio and still lose money. A lot of money. If you make $1,000 9 times in a row and you're up 9,000, and then on the 10th trade you lose 30 grand, you got a 90% win-loss ratio, but you just lost your ass. So the win-loss ratio doesn't tell me anything either. And in fact, if you can increase the stop loss to something outrageous like that, you will have a really high win-loss ratio and you'll have something to market. And we don't do that, right? So we don't talk about percentage returns. We don't talk about win-loss ratios because, we'd rather you understand what they are, what they aren't, and that you track them yourself, right? So that's no good. And then you get the other guy that comes up and says, I got a call option on Nvidia and I made $25,000 in 90 days or 30 days. Wow. Wow. Good for you, Joe Blow. Now, I'm not going to be rude. But what are you thinking? You're thinking probably the same thing I'm thinking. If he made 25,000, that's good. But how many options went to zero? Just how much did he lose to get that 25,000? Doesn't tell me anything. So this is how we keep score. And if you don't know this number and you're not doing this, you're behind. So this is the most valuable thing I can share with you today. Let's say last week you had a gross profit of $10,000. A gross profit. That's gross. And you had a gross loss of $5,000. What is your net? 10 minus 5. Your net is $5,000. Okay. The next week, you do everything exactly the same, and you have a gross profit of $1,000. You have a gross loss of $200. Your net the second week is $800. Which week did you trade better? Now, most people are going to say, and most people are grading themselves week to week, if they stay at this, on the money. So that's kind of a stupid question, Bagger. Obviously, the week that I made 5,000, I made $5,000. The second week, I only made 800, and they beat themselves up for that. And the reality of it is, the second week where they made 800, they traded much better. They traded actually 2.5 times better than the first week. How can that be, Bagger? Divide the gross profit by the gross loss in the first week. $10,000 divided by the gross loss, 5,000, is a profit factor of 2. The first week, person, yes, netted 5,000, but their profit factor was 2. They made $2 for every dollar they made, or every dollar they put at risk. That's respectable. Nothing wrong with that. That was good. But the second week, they had a gross profit of 1,000, a gross loss of 200. Divide those two. Now they only netted 800, but their profit factor was 5. 5. They made $5 for every dollar they put at loss. Much better. Much better. Profit factor. It equals it all out. Now, I asked the hockey captain up in Connecticut for his profit factor because he does promote that shit, and he blocked me. I've asked people who have been trading for 10 years what their profit factor is. They don't even know. They don't even know what it is, and they don't know what theirs is. And if you're listening to me today and you've been trading for weeks or months or years, and you're not tracking your profit factor, and you're not doing that, then you don't know what you don't know. And the most wasteful thing is you don't have where we started. You don't have the information that you need to know what you need to work on. You might be doing some things really well, and you might be doing some things really poorly. You have to know what part of your game needs work. Maybe it's putting, maybe it's hitting the fairway, maybe it's this, but the profit factor will tell you where that is, and you need to do that. But most people don't, because I don't know, they just don't. So we're not winging it. When I worked with surgeons, they're surgeons. I had to encourage them to change one tiny aspect of their surgical procedure for a better outcome for their patient, for them, for their hospital. It could take months for them to change one tiny aspect of it. They wanted to see the data. They wanted to measure it. And when they did it, they tracked it. And they had people on staff that did track it. Sometimes the companies would have to track it for them. They didn't wing it. The problem is, or the challenge is, these trading companies or these, the trading game, anybody can get in. The bar to admission is if you can fog a mirror and you have enough money to lose, they'll let you in. Come on in. Start buying and selling, selling and buying. And you could lose a fortune. The first thing that we want to teach everybody during the Q School, we have zero tolerance for negative outliers. Zero. Now, I don't know how you're going to do. I think, I like to think that everyone that we accept that come in to the Q School is going to do well, but I won't know. And they won't know until the end because we're going to peel back a whole bunch of different things and it's a challenge. It is. You're going to be seeing a lot of different things and, in a compressed period of time. But you're going to have a really, really pretty good idea. Now, one of the things is we got to get those negative outliers off the table. But a profit factor, if you are below 1, you are a losing money machine. You're just going to lose. And you're going to keep losing. If you are 1 to 2, You are putting shingles on a roof in Tampa Bay in the middle of the summer. You are working hard. 2 to 3, we consider average. Over 3, you become a money-making machine. And you are now playing golf and it looks effortless. Ever see that guy? He's out there and he's just like swinging. It's like, man, look at him swing that club. But he worked hard to get there. Um, we have had members, doesn't matter to you though. It only matters what you do, but we have had members have weekly profit factors of 80 and 100. David in Germany called me and on a Friday and wanted me to know, Don, I had a profit factor. So how'd you do, David, this week? I had a profit factor of 80. He was high as a kite. Now, because you know how profit factor works, I didn't have to ask, but if he lost $100, he made 8,000. If he lost $1,000, he made 80,000. I think it was in the latter range because he said, Don, you're probably not going to hear from me for a couple of months. I'm going to take a little break. Good. Pace yourself. You can't, I can't even play golf every single day, or go fly fishing every single day. Most valuable thing I can tell you. So we bring it full circle. Um, do you want to learn? Or do you want to just shadow the internet and pick off trades and fool around? If that's what you want to do, have fun, do it. But I don't have time to waste. I just don't. And I surround myself, I always have done this. I surround myself with folks that really enjoy fly fishing, really enjoy golfing, really enjoy the markets. I want to be around people that enjoy the shit that I enjoy. And I'm sorry, I just don't give a shit about the Tampa Bay Bucks. Just I've lived in Tampa Bay for years, for decades. I've never been to one game. And that's okay. It's all right, right? I mean, if you do and that's your thing, I have at it. Good, good. Surround yourself with that. And the fantasy football and stuff, but that's just not my gig. But if you want to do this, then, find somebody who's going to mentor you. And so with that, it's 12:12, the bottom of the hour. We got to get cracking here. Um, we're probably going to let this run continue. We may punch up a little bit tonight. I'm going to leave it open and give you a chance to ask any question you want. I didn't even know where I was going, right? When we do these, I just it's like an information. I just trying to share with you what we're doing and what we're about. Um, and you're going to get to write your own. You see, the way I look at it is it's kind of like, if I go out to play golf, right? I don't want to make the investment in the golf club and the golf balls and all the lessons and everything, and then have some other guy hit the golf shot. I mean, that's no fun. You want to play, don't you? I don't need some guy at the corner of Edward Jones and Company or whatever telling me what to buy and sell. Why would I do that? And what does he friggin' know? What do any of them know? I mean, this isn't surgery, you know. Trust me, it isn't. And the surgeons, by the way, many of them wanted to talk more about the markets than surgery, so it was very conducive. Um, these robots, Intuitive Surgical, ISRG, it's had a big run of late. It's a surgical robot. You actually sit in it like a capsule. I've sat in it. I've actually picked up things like little blocks, like little kids blocks, little tiny ones. Um, just because I can sit in the Intuitive Surgical robot, which is like $1 million machine, hospitals have to build a special wing. They all have to be specially trained, the surgeons as well. But just because I can sit in it doesn't mean that I can do open heart surgery on you using the surgical robot. Probably not a good idea. You must be a surgeon. And I borrowed the phrase, see this here? It says robot assisted trading. I borrowed that phrase from Intuitive Surgical. The hospitals will market and they'll say on their billboards, you'll see them going down I-10, I-95, wherever you live, and or I-4, and it'll say robotic surgery at our hospital. Oh, that's the hospital I want to go to. I'm gonna get R2-D2 to do robotic surgery on you. Well, the company doesn't say that. The company says robot assisted. It's a robot assisted surgical device. The operative word being that you need to be a surgeon. So, do we have trading robots? Yeah, we got dozens of them. But you're going to need to learn them. You're going to need to choose them. You're going to need to, have good acquired trading skill. That's going to have to come over time. The rest of your life. It's a great way to go. I don't have to travel. I don't have any conference calls. I don't have a whole lot of paperwork. Got a little bit. Got a great life. It's great. It's awesome. We couldn't have done this before 2002, by the way. These bastards have been doing it since the 80s. Who is the most successful investor ever? Don't tell me Warren Buffett. He's good, but he's not the best. You want to know the best? The best of the best? Jim Simon. Never heard of him. He just recently passed away. He started a hedge fund called Renaissance Capital in 1981. He was a mathematician by trade. He also worked for the NSA and had a kind of an interesting career, and he decided to apply what he knew to the markets. And he was a quant. He dwarfed. Go look him up. You'll see the videos of him. Look at his performance versus Warren Buffett. He makes Warren Buffett look like, oh, I don't know, very, not very good. Thousands and thousands, something like 40,000%. The fund is closed. He closed it in the 90s to just the employees. They kept it to themselves. We've been asked, well, why do you make this available, Don? Well, it's not a zero-sum game. The markets are extremely deep. We could have a member that took the same trade that I did, and maybe they made 500 and they're out golfing right now. Maybe they made 1,000. Maybe they made 1,500. Mm, you know, it's no skin off my nose. They're not taking it away from me. The markets are deep. It takes about 100 mini contracts to move the S&P a tick. About 100. We're not trading 100. They are. They're trading thousands of these things. And you're competing with men and women in New York and in Chicago and some, Arab sheik off of Monte Carlo, and he's got the trophy girls jumping off the back of his boat, and he's down in the bowels of the boat with a bunch of screens, and he's trading with us. Imagine that. The fool. But he is. They are. They're doing it all over the world, trading the exact same markets. It's up to you. I'm going to shut up for 10 minutes and monitor any questions, and then we wish you the best. All right. You're welcome to call. Please give some thought to what we've said. Give some thought to the website. You can send us your questions, but give some thought. We don't accept everybody because of the hurricane. We really should have been shutting down the Q schools for this year. But we got thrown off. So we have a certain number that will allow. For the last 3 to 4 years, we've cut it off on November 1. We were on pace to do that. But because of the hurricane, we'll stay with it. So we still have 1 or 2 spots, between now and the end of the year, and then we start again next year, which there'll be plenty. And folks reserve weeks, months in advance, and that's fine. So I'm happy. It just depends on what you want to do, and if you want to be a monthly swing trader. If you're a monthly swing trader, by the way, you probably shouldn't even be looking at the intraday action, right? If you're an investor, you shouldn't even be looking at the weekly action. If you find yourself watching the markets intraday, then you really want to be an intraday trader. I mean, and I think you would really want to be trading futures because, for the reasons that we talked about. Why not? Um, what happens with many people is they can have great success trading a half a dozen times a year. You can do very, very well. And then a person says they overread their skill set and they say, okay, I'm going to quit my job because I had 5 or 6 really, really big trades and did it for a couple of years during a bull market. Now I'm going to trade actively. And then suddenly they find out they don't have any game. It is a different game. You've got to define the resolution. And we talk about this in terms of like a football stadium. If you're an investor, you know, you are up in the skyboxes with the hoi polloi, eating shrimp and caviar, and occasionally looking at the game and the cheerleaders, and you're having a great time. It's a social event. It's just you're glad handing, and you happen to be at the game. You're there with Taylor Swift. Make me barf. If you're a swing trader, you're out in the elements. You're in the stadium seats. And you're putting on some options and you get rained on and you see part of the field and you see the people behind you making big money and you see the players and maybe you don't need binoculars, you can see some of the cheerleaders and you're having a good time. When you're trading intraday, you're on the field. You are part of the game. You don't have time. You're not seeing the skybox. You're not seeing the fans. You're not seeing the cheerleaders. You just see that son of a bitch coming around the corner, the running back, and your job as the defensive end is to make sure that son of a bitch doesn't get outside you and run down the field and score a touchdown. So you don't have time to screw around. The good news is you can use machinery. So yes, we're up, 3,200, 3,400. I just got to make damn sure that thing doesn't, turn around and go the other way. And it isn't. There's machinery on it. I'm been responding to it, you know, um, the whole time that we're here, and I'm mostly just ignoring it. He's not going to get outside me. I'm not going to let that happen. Now, will I occasionally, bad word, will we lose trades? Yes, but I'm not going to have negative outliers. We're going to calculate the losses in advance. That makes sense? All right. I didn't see any other questions, so I promised to shut up these last 10 minutes. Any other questions, let us know. And then if not, we'll say our goodbyes now. And be sure to push the like buttons, hit the notification buttons, because you never know when we're going to pop up. And this time of the year, it's really difficult to have a schedule. During the summer, when it's slow, we try to do it like middle of the day. We'll always try, but sometimes like this, when it's really busy, we'll punch up in the evening. You get a chance to see some of the market, ask a question or two. And but if this there, we see what you see online. We don't see anybody doing what we're doing. And by the way, to be a monthly member, you don't have to have TradeStation, but to be an annual member, you must have it because our tools only work at TradeStation, and we're not going to change that because they're just too damn good. And they do things that we can't do elsewhere. We just can't. And so that's, if you're in another part of the world, one of the first questions you want to ask, can I get TradeStation that they get in the States? And unfortunately, some places that's not the case. And I gotta believe it's regulatory or some dang thing. Unfortunately, many, we're beginning to learn that maybe in some parts of the world, maybe even here, that we're not as free as we think. But hopefully that'll change. All right, I'm gonna shut up here for the last 5. Any questions, let us know. I also want to just show you something. How did we know? We were asked, how did we know on Friday and on Monday to get those options over the years is more accurate than other? Is there a time interval? Um, so the question is from Joe. Thanks, Joe. Is there a very insightful questions from Joe? Um, is there a time interval over the years is more accurate than others? Um, I always hate these answers like it depends. Um, it isn't that the time interval is accurate. It is the accuracy comes from the trader. So the interval is the interval, the time is the time. If the trader is not accurate, is not disciplined, then it isn't the interval that fails. It's the trader. The other thing is, Swing Machine is operating all on time. This is time-based. Markets are not dependent on time. Prices move up and down. They don't move left to right. They move up and down. Time, we inject, and it may be kind of a bad thing. Over the years, they put, the price action on time charts, and you see it, and they're time dependent. We actually think that many times that the time charts, distort the price action. In fact, the really, really good option traders won't even look at a time chart. And many times we don't either, you know. So the other piece is, well, then if you don't use a time chart, what other charts are there? And that's what we also teach here in the Q school, are what we call the price charts, price, which is in the end all that matters. Price, 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 price. So it just depends. So if you are trading um intraday though, you can't really be trading a 30-minute chart or an hourly chart, because an hourly chart or an hourly time frame, we've had hourly signals on Swing Machine last for over 2 weeks, up thousands of dollars when they do that. Sometimes the hourlies only last a few hours, but sometimes they last a couple of weeks. The minute, 3 minute, 5 minute, we'll get on a 1 minute, and we actually have a counter here. Um, let me show you. Um, let's see here if I can highlight this. So we got a couple of plots hidden, not to hide them, but just to save space. We can actually show you now. This is set from 4 o'clock. See this 1 minute? Since 4 a.m., there have been 8 longs and 9 shorts. The 5 minute, there's only been only one trade today. So, and I'll bring those out of there because it kind of we hide them just so that because it to cheat some space, make some space. Um, so it depends upon what you're trying to do. And the further out we go, we begin to reduce leverage. So if we're trading up close, we're going to use more leverage, shorter time frames. But if we're trading out, 35 or 45 days, we're going to define our risk and we're going to use, less leverage. But interval, you can get away from time interval altogether, and be trading price charts. We share the story, the person who made the millions off of Ethereum, we taught him how to use point and figure, and he used point and figure. And Darian, if you can hear my voice, I'm not sure. I got your email and we're compressing that video right now. So I just want you to know that. And once again, how many times that's going to be up to the individual trader too, right? Most new traders, they do what we see is they trade too frequently, they trade too fast, and they use too much leverage. The folks that play for year after year after year after year, they don't trade as much as you think. They trade very responsibly. They use leverage, but not, exorbitant, and they're just very methodical. They're very patient. They're very disciplined. Okay, and we just closed that trade, and we be done. And I want to wish you the best. Let me go look if there's any other question. I had to park that screen. Um, 20 trading days. You kind of want to start from there. Think about think about what you've been doing. Think about what you want to do, and then set out to do it. And if we can help you get there, let us know. And but think about it. Most people though, what we see online and what we see are these services, give me some trades and I want to throw some mad money at it, and it's just kind of a waste of time for us. We don't want to waste any. All right, we're going to wish you the best. Joe, good to see you. Um, and we wish everyone the best. We're going to need to sign down. We take one last look at Swing Machine. The VIX goes long at 810. The market goes short at 445, 2,100 bucks, 5,000 on this trade, 4,900, 825, 1015, 255, 2,800. The Bitcoin. That's on a daily basis. Your job, this is like a fish finder as well. Your job, get the fish on the hook, get the fish in the boat on the stringer, and go do something else. No, we can't leave this open. I'm sorry. But we wish you the best. Thanks.